Yeah, welcome all. So we are discussing CA Inter May 2022 Cost Management Accounting paper solution. So let's get into the solution. Question number 1. Question 1A. Let's check क्या दिया हुआ है यहाँ पर. A Limited is a toy manufacturing company and its requirement of raw material from S Limited is at rupees 120 per kg. So cost of raw material per kg दिया है. The company incurs a handling cost of 400 plus freight of 350. What exactly we are supposed to do वो read कर लेते हैं. Calculate the economic order quantity. EOQ ढूंढना है of raw materials. As we all know, your formula of EOQ, that is which we call it as Q, is nothing but 2 root of AO upon C. A is the annual requirement, O is the ordering cost per order, and C is the carrying cost per unit per annum. So let's check. Company incurs handling cost of 400 plus 350 per order. So matlab your ordering cost is 400 plus 350, which will come to 750 rupees per order. The incremental carrying cost of the raw material is rupees 0.25 per kg per month. Correct? So per kg per month is the carrying cost of 0.25, but we require per kg per annum. So per month ko you have to convert into per annum. So it will become 0.25 into 12. Correct? Plus in addition, the cost of working capital finance on investment of inventory of raw material is rupees 15 per kg per annum. So this is another carrying cost, 15 rupees per kg per annum. So you will add with this. So 0.25 into 12 plus 15, that will come to rupees 18 per kg per annum. Fine. So we know A, we know O, we know C. Then the annual production of toy is 60,000 units. And 5 units of toys are obtained from 1 kg of raw material. Means for every 1 kg of raw material, you get 5 units of the toys. And how many toys are you going to produce? 60,000 toys. So your A will be 60,000 divided by 5. So that will be equal to 12,000 kg of raw material is required. If you get 12,000 kg of raw material into 5 kar do 60,000. 12,000. 1200 kar do, so 1200 into 5, that will give you the 12,000 into 5 will give you 60,000 kgs of annual consumption, right? So 12,000 kgs is required, that's your A. So what will be my formula here? Q is equal to 2 into 12,000 into 750 divided by 18, that will come to 1000 kgs. So your EOQ, which we call it as Q, is equal to 1000 kgs, right? Okay. Advise how frequently should the company order in order to minimize its procurement cost. Assume 360 days in a year. So how frequently? How frequently means at what period they should place order. What period? How many days? How many months they should place order? Here it is in days. So how many days, within how many days they should place the order? For that, what we should know, how many orders they are going to place. So requirement is what? Requirement is 12,000 kgs, and for one order 1000 kgs. Matlab pure saal mein how many orders they will place? They will place 12 orders. So 360 days mein if they are going to place 12 orders, so it will be 360 divided by 12, that will come to 30 days. Matlab every 30 days they need to place order. Every 30 days they need to place order. That's the meaning. Then calculate the total ordering cost and total inventory carrying cost per annum as per EOQ. The total ordering cost, how do we find out? We write the annual consumption divided by Q into the cost per order. Then how do you get the total inventory carrying cost? Total inventory carrying cost will be 2Q by 2 into C. Our Q is nothing but 1000 divided by 2 into rupees 18. You will get the answer. Here it will be 12,000 divided by 1000 into per order is 750 rupees. So multiply kar do, you will get the answer. I hope that's clear. Very good. Chalo, that is question number 1A. Let's move on to the next one. Question number 1B. So we'll have the question 1b. Let us check what is given in 1b. PQR Limited has replaced 72 workers. This is number of workers replaced. Matlab it is from the labor chapter. During the quarter ended 31st March 2022. So they are talking of one quarter. The labor rates for the year for the quarter is given flux method, replacement method, separation method. As usual, we would like to know what exactly is the question asking for. So let us check. You are required to ascertain, number one, average number of workers on roll for the quarter. Average number of workers is required. So what we'll do, we know the number of workers replaced. So which formula we can use? You can use replacement method. What is the formula for replacement method? So replacement method, the formula is number of workers replaced upon average number of workers into 100. Average number of workers into 100. We know the replacement done percentage is 8%. Number of worker replaced is 72 upon average number of workers into 100. So you do the calculation, cross multiply kar do, the average number of workers, that's the first part will be, if you transfer it here, this will become average number of workers को यहाँ ले लो, 8 को down shift कर दो, so this will come to 900 is the average number of workers. So we got the answer 900, right? Okay, next, number of workers left and discharged during the year. Number of workers left and discharged. So how many of them you removed and how many of them you discharged during the year, that we want to find out. For that we'll use the separation method. So separation method, what is the formula we studied? Number of workers left plus there is number of workers discharged. There is left plus discharge, or left and discharged upon average number of workers into 100, right? So we have the percentage. So what will put the percentage? So phi is equal to number of workers left and discharged upon 900 into 100. So cross multiply. So you will have the number of workers left and discharged, you will get it as 45. Done. Next, number of workers recruited and joined during the quarter. The number of workers recruited and joined during the quarter. So this is what we want to find out. So what we'll do here, for this we'll use the flux method. So what does the flux method say? So flux method, as we know, the formula for flux method is, so formula for flux method is what? Number of workers. So the formula is number of workers separated plus number of workers accessed, number of accessions. Number of workers accessed upon average number of workers into 100. Okay, number of accessions means what? It is replaced plus whomever you have recruited, joined, all those extras will also come into that. That's a total cumulative. So number of workers separated plus number of accessions upon number of average number of workers into 100. So what is the formula we will place here? So we'll put the values. So how much is the value? The value will become 16. So you'll have 16 is equal to number of workers separated was 45 plus number of accessions upon average number of worker is 900, divide by 900 into 100. So you multiply that. So this is gets cancelled. This is 144. So 144 minus 45. So you'll have number of accessions will come to 99. Number of accessions will come to 99. What is number of accessions? That is total number of workers fresh recruited plus replace, everything cumulative comes to 99, right? Then equivalent employee turnover rates for the year. These are the rate for quarter. Answer is given in the question, the values are given of the rates in quarter. We want it in terms of year. So what do you do? Multiply by 4. So if you multiply by 4, so into 4 will make it 64%, into 4 will make it 32%, into 4 will make it 20%. I hope it is clear. That's your question number 1B. Let's move on to the next one. That is question number 1C. What does question number 1C ask for? Now in question 1C, what they are asking? They are saying top Optech, a manufacturing company, is presently evaluating two possible machines for the manufacture of superior pen drives. The following information is available. Machine A, machine B, what is given? Selling price, variable cost per unit, fixed cost total, capacity is given of both the machines. What they are asking, recommend which machine should be used. Would your answer change if informed that in near future demand will be unlimited and capacities of the two machines will be 12 lakh units each? Why? You are supposed to give the reason. Now we are supposed to answer which machine should be chosen. So based on the data given, if you check the data given, then selling price is given, variable cost is given in both the cases, and fixed cost is given, and their capacities are given at the individual level. Correct. And what is the demand? That's not given. So demand is not given. So what we do is, we can find out the contribution per unit, that is 160, and here contribution per unit is 150. We have the fixed cost. So what we can find out is, we can find out the BEP units. How do you get the BEP units? Total fixed cost upon contribution per unit. So that will be equal to 350 upon 160, and here it will be 200 lakhs upon 140. So you have 350 lakhs upon 160 and 200 lakhs upon 140. So the answer will come to, here it will come to 2,18,750 and 1,42,857. So this is a BEP units of machine A and machine B. Correct. So which machine is to be used? We don't know the demand. We only know the capacity. We don't know the demand. What is the demand? That's not given for sub question number 1. So whichever machine has a lower BEP, that should be given priority. Why? Because lower the BEP, faster you will be able to reach your BEP, and you will start earning profits at an early stage. Correct. So obviously which machine will be recommended? Machine B will be recommended, as it has a lower BEP, earlier profits, and that is why machine B will be recommended for sub question 1. Now sub question 2 says, would your answer change if you are informed that the near future demand will be unlimited and capacities of the two machines are 12 lakh units each? Now demand is unlimited. So obviously if the demand is unlimited, I would like to ensure that I get maximum profit. So how do I get maximum profit? Simple. Machine A, machine B, 12 lakh units is the demand. What is the contribution? The contribution is 160. So 12 lakhs into 160, here it will be 12 lakhs into 140. So you'll get the total contribution minus the fixed cost. How much is the fixed cost? One place it is 350 lakhs. Another place it is 200 lakhs. So 350 and 200 lakhs, this is in lakhs. So what do we do here? We multiply, that will come to 12 lakhs into 160. So 12 lakhs into 160 will give you 1920, and here it is 12 lakhs into 140 rupees is the contribution per unit, 1680. So subtract, so you will have here 1480, and here it will be 071241570. So obviously here the profit is higher, so machine A will be used because you are getting higher profits. Done. Next, let's move on to the next question. That is your sub question number D. The second part of the there is a last part of question number 1. What is asked here? Coal is transported from two mines X and Y, unloaded at plots in the railway station. X is at a distance of 15 kilometers, Y at a distance of 20 kilometers from the railway head plots. What are you supposed to do? Let's check. You are required to prepare a statement showing the cost per ton per kilometer. Cost per ton per kilometer. So what we do? Total cost divided by the number of tons and number of kilometers. Number of tons into number of kilometers. Carrying coal from each mine X and Y. So you're supposed to find out the cost per ton per kilometer. So we'll first find out the total cost. How do I find out the total cost? If you see here, distance is given, here it is 15 kilometers, here it is 20 kilometers, and the fleet of lorries having carrying capacity of 4 tons, so the ton is fixed, 4 tons for each of them, is used to transport coal from the mines. Okay, record reveals that the average speed of lorry is 40 kilometers per hour when running and regularly take 15 minutes to unload at the railway head. So matlab the traveling speed is 40 kilometers per hour, unloading is 15 minutes. At mine X, the average loading is 30 minutes per load. Mine Y, the average loading time is 25 minutes per load. Okay, let's something related to ours is also there. Y, let's check. Driver wages, depreciation, insurance, taxes is rupees 12 per hour. So the cost is 12 per hour. So we should know what is the time taken. We'll find out for one trip. Okay, let's find out for one trip. So what is the time taken for one round trip? Time taken for one round trip. One round trip, what is the time taken? So सबसे पहला, there is unloading 15 minutes plus loading is 30 minutes plus travel. Travel takes how much? 15 kilometers is a travel. So 15 plus 15, 30. 30 and 40 kilometers is speed. So total distance is 30 kilometers because you're going and come back. So 30 kilometers and speed is 40 kilometers per hour. So time taken will be what? Distance upon speed. So that will be 0.75. Correct, 0.75. So 0.75 is nothing but your 0.75 is the time taken here. Correct. So 0.75 is, you can say, 45 minutes. So if you add up, that is 60 and 90 minutes total. So you can say 1.5 hours. So here it is 1.5 hours. Here let's check for Y. The unloading time is 15 minutes only, but loading time is 25. So plus 25 plus travel time. So going and coming back, it is 20 kilometers. 20 plus 20 is 40 kilometers. Speed is how much? 40. So matlab it will take 60 minutes time. So 60 minutes time. So 60 minutes time it is going to take. So if you add up, this will come to 40 and this is 100. So 100 divided by, correct. So 100 divided by 60, that will come to roughly, exact if we find out, that is 1.667, right? So 1.667 hours. Okay, now so the driver wages will be 12 rupees per hour. So here it is 12 rupees per hour into 1.5 hours is 18 rupees, and 12 rupees per hour into 1.667, that will come to, this will be you can say 5 by 3. So that will be 20 rupees. Okay, then operated fuel, oil, tire maintenance is rupees 1.6 per kilometer. So 1.6 per kilometer, how many kilometers are there here? So 1.6 into here 30 kilometers, so that will come to 48 rupees, and here 1.6 into how many kilometers? 40, that will be 64 rupees. So you add up total cost. So total cost is 18 rupees plus 48 rupees, that is 66 rupees. Here 20 plus 64, 84 rupees. So this is the total cost per round trip, right? Now we have to divide by kilometers tons or tons kilometer. So ton kilometer, how do you get ton kilometer? Per trip is 4 tons into how many kilometers? 30 kilometers, 15 plus 15, 30 kilometer. So the division will be by 120 ton kilometer. Here also 4 tons into going and coming back is 40. So it will be 160. So you divide that, 66 divided by 120, and here it will be 84 divided by 160. So that will give you the answer for question number 1D. I hope you are clear. Okay, let's move on to the next one. Yeah, let's move on to the next one. That is question number 2A. Let us check question number 2A. What is given here? In a manufacturing company, the overhead is recovered as follows. Factory overheads is a fixed percentage on direct wages. So factory overhead is a fixed percentage of direct wages. So how do they recover factory overheads? They will say factory overhead is, you can say, X% of direct wages. whatever percent we don't know. And administration overhead is recovered as a fixed percentage of factory cost. So they will say admin overheads is equal to suppose y% of factory cost. That is the concept. Okay, let's see what is required. Compute the percentage of recovery rates of factory overheads and admin overheads. So they want you to get the percentage. So we already assumed it as x and y. So let's keep it as x and y. So factory overhead is x% of direct wages, admin overhead is y% of direct wages. Fine. Then what exactly is the data given? They are given as a direct material, they are given as a direct wages, they are given as selling price, and profit is 12% on total cost. They are given selling price, but profit percent is on cost. And here it is 20% on total cost. So what exactly we'll do? We'll have to make a cost sheet. Direct material plus direct wages will give you prime cost. Add factory overheads. How do I do it? X% of 84,000. Here it will be X% of 60,000. I'll get the factory overheads in terms of X. Add, you will get the factory cost. Then admin overheads will be Y% of factory overhead. So whatever answer you got in X, multiply by Y%. So you'll get the factory overheads, admin overheads, which will be in terms of X and Y both. Right? Then get the total cost. Add the factory cost plus admin overheads will give you the total cost. Do I have the total cost? Yes. How do I get the total cost? Selling price minus profit. If I do, I'll get the total cost. So my total cost is in numbers, as well I have the total cost in terms of X and Y. So I make two equations, solve those two equations simultaneously, I'll get the values of X and Y. Like for example, if I do it for you, so like job 1 and job number 2. So if you see the selling price is 3,33,312 and here it is 2,52,000. So I'll say less profit. So as you know, the profit will be, it is on the cost. So I'll say cost is 100, so profit is 12. So my selling price is 112. Now I have the selling price 3,33,312. So do the cross multiplication, you'll get the profit, that will be 35,712. So I'll get the total cost 297,600. Done. Next, here the profit 20% on cost. As we all know, 20% on total cost is 1/5 on cost, which will be 1/4 on, which will be nothing but your 1/6 on selling price. So 1/5 on total cost will be 1/6 on selling price. So 2,52,000 into 1/6 will give you 42,000. So this will come to 2,10,000 total cost. Done. Okay. Now let's move on to the equation part of it. So how do I form the equation? Let's get me the equation here. So if I do it here, job number 1, job number 2, then I have the direct material. So how do I do it? Direct material plus direct labor will give you the prime cost plus factory overhead, which we have assumed as X%, Y%, correct? And then I'll get the factory cost, and to the factory cost I'll add the admin overheads and equate with the total cost. Now what is my direct materials? My direct material, you can have the question sheet with you. So it will be 1,08,000 and 75,000, and direct labor is 84,000, 60,000. So this will come to 1,92,000 and 1,35,000. So X% of 84,000. So 84,000 into X%, that will come to 840X, and here it will be 60,000 into X%, which will be 600X. So I'll add, so this will become 1,92,000 plus 840X and 1,35,000 plus 600X, right? Now what will I do? I'll add the admin overheads. How do I get the admin overheads? Which is Y% of factory cost. So Y% of factory cost. So 1,92,000 plus 840X into Y%, and here it will be 1,35,000 plus 600X into Y%. So you multiply this, this will come to 1920Y plus 8.4XY, and here it will be 1350Y plus 6.6XY, right? Add this, this will give you the total cost. So total cost will come to 1,92,000 plus 840x plus 1920y plus 8.4xy, and the other one will be 1,35,000 plus 600x plus 1350y plus 6xy. And I already have the total cost with me. If you remember, the total cost with us was 297,600 and 2,10,000. Right? So equate, you will get two equations. First equation will be 1,92,000 plus 840x plus 1920y plus 8.4xy is 297,600. Right? Equation number 1. And 1,35,000 plus 600x plus 1350y plus 6xy is equal to 2,10,000. That is your equation number 2. What you can do? Equate. We have studied in our lower standard, so equate them. So equation number 1 into 1.4 you, sorry, equation 2 into 1.4 you do. Equation number 2 into 1.4 if you do, this will become 840x and this will also become 8.4xy. So that will get cancelled and you will get the value of y. Put the value of y in equation 1, you will get the value of x. Okay. So solve equation 1 and 2 by this multiplication. You will get x is equal to, first you will get y will be 20%, and you substitute the value of y is 20%, you will get x which is equal to 66.67%. Okay, 66.67% means what is the conclusion? The conclusion is factory overheads is 66.667% of direct wages and admin overheads is 20% of factory cost. That solves your sub question number 1. That solves your sub question number 1. Next, what we want here, they are saying calculate the amount of factory overheads, admin overheads and profit for each of the two jobs. Profit to be already done, we'll get the factory overheads and admin overheads, right? So what we can do is we can pick from the place where we stopped. So we can start with job 1, job 2. We already have the prime cost. I'm just doing it a shortcut. So prime cost is 192 and 135. So 1,92,000 is prime cost, 1,35,000 is prime cost. Add factory overheads. How do I do factory overheads? That is 66.67%. So whatever is my direct wages, so 84,000 into 66.667%, and here it is 60,000 into 66.667%. So I'll do that. That will give me 56,000, and here it will give me 40,000. Correct? There is 2/3, no, 40,000. This will give me my factory cost. So factory cost will come to 2,48,000, 1,75,000. I'll get the admin overheads which is 20%. So admin overheads is 20%. So 2,48,000 into 20% and 1,75,000 into 20%. You will get your factory overheads which will come to 49,600 and 35,000. Right? Then you'll get the total cost, and we already have the profit calculated. We have the selling price. That ends the question. Profit we already done, right? So that will finish that particular part. Let's move on and check what is asked in the third part. Using the above recovery rate, determine the selling price of job number 3. Additional data is given. This is very simple. Direct material you know, direct wages you know. So add that, you will get the prime cost. The prime cost will come to, this is 80, 90, 90,250 plus the factory overheads. For factory overheads, what you do? 66.667% of 22,500, that will come to 15,000. 15,000, you will get the factory cost which will be 1,05,200. So this will be 91,250, no, sorry, that is 750 and this one, sorry. So 91,250. So this will come to 1,06,250. Correct? So 1,06,250 plus you'll add your admin overage, which is 20% of 1,06,250, which will come to 21,250. Add that, you will get the total cost, and total cost will come to 1,27,500. Add profit. Profit, how do I do it? It is 15% of selling price. So very simple, no? Like you say, cost is selling price is 100, so profit is 15, cost becomes 85. So I have the cost 127,500. So you get the profit, cross multiply, you get the profit, add the profit, you'll get the selling price. That sorts out question number 2A3. Let's move on to the next one. The B part. What's asked in the B part? So B part, they are saying Paramount Construction engaged in construction and erection of bridges, okay, entered into a big contract at an agreed price of 250 lakhs. That's a contract price. Subject to an escalation clause for material and labor as spelled out in the contract. So escalation part is there for material and labor. And corresponding actuals are given to us. So standard is given, actual is given, materials PQRS. This is your standard quantity, this is your standard rate, this is actual quantity, this is actual rate. Okay, actual rate, fine. Labor, again standard hours are given, standard rate is given, actual hours are given, actual rate is given. What they are asking us? Prepare a statement showing the admissible additional claim of material and labor due to escalation clause. So due to escalation clause is basically relevant to the price rise. So whatever is the price rise, that we are ready to compensate, right? And if there is a decrease in price, that much reduction will get. Fine. Multiplied by which quantity? Obviously the standard quantity. You are not going to pay for inefficiencies, right? So what we'll do is, we'll write difference in rates, that is your actual rate minus the standard rate. If there anything more, we have to pay it. So we'll say claim admissible claim. So how do I get this column? This will, let's name it as 1, 2, 3, 4. So this will be nothing but 4 minus 2, and this will be our column number 5, correct? So column number 5, this one, column 5. So this admissible claim will be nothing but the standard quantity, which is column number 1 into column number 5. So difference in rate multiplied by the standard quantity. So let's get the difference in rate. 1750 minus 1500. So 250 is the growth, here minus 100 reduction, here minus 150, here increase is by 1700 rupees. Then here also 70 rupees, so 10 rupees difference, here 5 rupees, multiply, you'll get the admissible claim. Like for example, let me do the first one for you. That is 2800 into 250, that is 2800 into 250. So we are going to get 7 lakh rupees we need to pay, and here it is 3100 into minus 100, so negative 3,10,000. And here again we need to, there's negative 800 into minus 150, so 1,20,000. Benefit will get 170 into 150 into 1700, that will come to 255. This has to be the part of escalation clause. So you add that, you will get the answer. There is 955 minus 430. 955 minus 430 will give you 525. And here again same, standard are 65,000, difference or 6,50,000, and 46,000 into 5 rupees, that is 2,30,000. So 8,80,000. So add 8,80,000 plus 5,25,000, that will come to 14,05,000 is the admissible escalation claim. To this we will add, then they are asking what is the final price. So what was the contract price? The contract price was 250 lakhs. To 250 lakhs you will add 14,05,000, so it will become 264 lakhs and 5,000 rupees, correct? So that will be the part there. Then next, Distinguish between job costing, process costing, any 4 points of difference that is directly given in the module. So you can refer to that. Let's move on to the next one. That is your question number 3A. What exactly is asked in question 3A? Fine. So let us check. SR Limited. One second. Yeah. So SR Limited is a manufacturer of garments. For the first 3 months of the financial year 22-23, commencing from 1st April 2022, the production will be constrained by labor. Constrained by labor मतलब labor becomes a key factor, उतना उसका shortage होगा. It is estimated that only 12,000 hours of direct labor will be available in each month. So every month is restricted to 12,000 hours. For market reasons, the production of either of the two garments must be at least 25% of the production of the other. So one garment needs to be 25% minimum of the other. Matlab, if I produce product A 100, then the other has to be, product B has to be minimum 25. It has to be 25 or more, but it has to be minimum 25. Estimated cost and revenue per garment is given below. The two things they are making is shirt and short. Sale price is given, raw material cost is given, then direct labor is given, fixed overheads is given. What exactly are we supposed to do? Let us check. Calculate the number of shirts and shorts to be produced per month in the first quarter of the financial year 22-23 to maximize the company's profit. So financial year, first quarter matlab you are talking of April, May and June 2022. This is the first quarter of the financial year 22-23, and in these 3 months only there is shortage of labor, which is available only to the extent of 12,000 labor hours, right? So obviously when there is a key factor, we know that the resource has to be used very effectively, and for that what we find out? We find out the contribution per labor hour, because labor is a key factor. So whatever is the contribution per labor hour, we'll find out, and whichever product has a higher contribution per labor hour, that product will be given the first priority. Okay, so let's get the contribution per unit for shirt and for short. Shirt and short, let's get the contribution. How do I get the contribution? 60 is selling price. So 60 minus 24 minus 6 minus 8. So that is 30, 38. So 38 and 60 minus we will do. So 22 rupees is contribution per unit. 44 minus 12 minus 4 minus 4. That is 20 rupees. So 24 rupees is a contribution per unit for short. And as I said, we'll get the contribution per labor hour. So we need to know the labor hours. How many labor hours will be required? Direct labor hour is paid at the rate of rupees 8 per hour, and the cost is 8 only. So how much it will take? 1 hour it would have taken. Here it is 4 rupees and it is per hour is 8. So they would have taken 0.5 hours. Right? So what will be the contribution per labor hour? Per unit divided by 1, that is 22. 24 divided by 0.5, that is 48. So if I do the ranking, the first choice will be making shorts, second choice will be making shirt. Okay. Now obviously this is a better product. So short, if I am going to make X units of short, then for shirt I need to make 0.25x minimum. Well, 25% to karna hi karna, right? There is no choice. Correct. So how do I do it? So for shorts, X unit, how many labor hours? 1 hour. So X into 1 hour plus 0.25. How many hours do I, 0.25x, how many hours? 0.5 hours is required, and the total should come to 12,000 labor hours. So total should come to 12,000 labor hours, right? So if you do the calculation, that will come to X will be equal to 16,000, because this will be X and this is 0.5. So 1 minute, sorry, 1 minute. This is short, so short takes X unit, उसके लिए half hour लगता है, तो 0.5 and a 0.25x, so 0.25x into, we are going to take 1 hour, no, it's reverse, so 12,000. So this will be 0.75x is 12,000, so x will be 16,000. So how many shorts? Short 16,000. And how many shirts? 0.25 of this, so 1/4 of this, that will be 4,000 shirts, right? So this is the number of units you will produce and sell of shorts and shirts, correct? Let's read further. What is asked? From the month of July 2022, direct labor will no longer be a constraint. Okay, nice. So second quarter, there's no constraint of labor. The company expects to be able to sell 15,000 shirts and 20,000 shorts in July. No opening stock at the beginning of July. Sales volume expected to grow by 10% per annum cumulatively thereafter throughout the year. Following additional information is available, and they are saying company intends to carry stock of finished garments sufficient to meet 40% of next month's sale from July. Estimated selling price will be same. Okay, and what we are supposed to do? So here how many shirts and shorts will be produced, that we already said. For shirts it is 4,000, for shorts it is 16,000, correct? Because there is a labor constraint. From July onwards, no labor constraint. Prepare the budget on monthly basis for July, August and September. Sales budget showing sales unit and sales revenue for each of the product. Then we are supposed to get the production budget also. So first let's get the sales budget, then we'll move on to the production budget. Let's calculate here. So if you are going to calculate, that is for the next one, that is your question number 3A, sub question number 2.1. So 3A, sub question 2.1, the sales budget in units and in rupees. So that is July, August, September. First we'll talk of shirts, correct? Let's talk of shirts in units. That is sale units. How much they have said? They have said it as 15,000. It starts with 15,000, grows by 10%, and shorts is 20,000, grows by 10% again. Selling price is 60 and 44. So 15,000, 10%, so 16,500, another 10%, so 18,150. And sales in rupees, what do you do? Sales in units multiplied by rupees 60, right? Then let's move on to shorts. Shorts, again the sale units, it starts with 20,000, grows by 10%, 22,000, that will become 24,200. Now sales in rupees, that will be sales in units multiplied by rupees 44, you will get the sales value in rupees, right? Then next is we want to get the production budget. So production budget, let's do for shirts. Again we'll get the month of July, August, September. Done. July, August, September, right? Fine. I hope the calculations are clear. Okay, fine. Now how do I get it for shirts? That is, we'll start with the sale units, that is budgeted sales. Budgeted sales is 15,000, 16,500 and 18,150, right? Then add. So this much is required, and then what they are saying, you will require a stock of 40%. So stock of 40% is you would like to carry forward to the next month. So 40% of next month sales you wanted in the closing stock. So you'll say add closing stock. So if you add closing stock, that will be 16,500 into 40%, then 18,150 into 40%. Then next month it will be again 18,150 into 10% would have gone up. It will go up by 10%, so 110% into we require 40% of that. So that will be 16,500 into 40%. I'm just doing the calculation for you. 6,600. Then 18,150 into 40%. 7,260. Then you have 18,150. First the sales will be up by 10%, and for we require 40% of that. That is 7,986. Right. Then less the opening stock. There is no opening stock. This becomes opening stock of next period. This becomes opening stock of next period, right? Then you subtract this, you will get the budgeted production. So this I have done for shirts. Same way you will do for shorts. No change in that, right? So that is how we do that particular calculation of question number 3A. Question number 3A done, right? Then let's move on to the next one, that is question number 3B. Yeah, question number 3B. The following data are available from the books and records of A Limited for the month of April 2022. So 1 month data given to us. What exactly are we supposed to do here? You are required to prepare a cost sheet for the above period showing cost of material consumed, prime cost, factory cost, cost of production, cost of goods sold, cost of sales. Then calculate the selling price per unit if the sales is made at a profit of 20% on sales. So 1/5 on sales, which will be equal to 1/4 on cost. 1/4 on cost, correct? 1/5 on sale is 1/4 on cost. Fine. So cost sheet, in short, you are supposed to make cost sheet. So let's think of how do we do it. So let's do the classification. Stock of raw material on 1st April 2022. This is nothing but opening stock of raw materials. Opening stock of raw material, where do you write? Direct material we write, below that we write opening stock. Raw material purchase, so this will be added to this opening stock. So opening stock के साथ add हो जाएगा direct material purchased. Then manufacturing wages is same as your direct wages. Then depreciation on plant, this will form a part of factory overheads. This will form a part of factory overheads. Then expenses paid for quality control check activities. Quality control check activities, you are supposed to do it. So this will be forming a part of, matlab you will add to your factory cost. Below factory cost you will add it. Then lease rent of production assets, this will form a part of factory overheads. Then administration overheads, production related, you will add it to the factory cost. Done. Next, expenses paid for pollution control, engineering and maintenance, this will also form a part of factory overheads. Then stock of raw material on 30th April, this will be less from direct materials, there where we have written the opening stock, add purchase, less closing stock. Primary packing, you will add it to factory overheads, matlab it will be again form a part of your you will add it to factory cost, जो factory cost में हम add करने वाले. Then research and development, process related, again add it to factory cost. Then packing cost for redistribution of finished good, this is secondary packing, so this will be added to your cost of goods sold. This will be added to cost of goods sold. Then advertisement expenses, this will form a part of your selling and selling overheads. This will form a part of selling overheads, right? Next, stock of finished goods on 1st April 200 unit, this is your opening stock of finished goods. 200 units, uska cost is 28,000. What do? We add this to the cost of production. So whatever is your cost of production total, you add this opening stock of finished goods to that. The entire opening stock has been sold during the month. The production during the month of April 2022 was 3,000 units. This is your units produced. Closing stock of finished goods on 30th April is 400 unit. This is closing stock of finished goods. So what we do, cost of production may you add opening stock of finished goods, you less closing stock of finished goods, right? Done. So this is how the whole process will be, right? Clear? And then you are supposed to make the cost sheet. So if you want to make it roughly, so if you understand this, question number 3b, so how many units you sold? So your units sold will be equal to opening stock. How many units we had in opening stock? We had 200 units in opening stock. We produced 300. Closing stock was 400. So you will say opening stock 200, 300 units you produced minus closing stock of 400 unit. This will come to 2,800 units have been sold, right? So let's make the rough cost sheet for your understanding. Particulars, rupees. So here we'll write direct material. So you will say opening stock of raw material, which was 10,000 rupees. Can take the question paper, do the additions there, add purchase of raw material 2,80,000 less closing stock of raw materials, that is 40,000. So 290 minus 40, so you'll get the direct material consumed, that is 2,50,000. Then you have your manufacturing wages, that is your direct wages, we'll add it to this 70,000. So you'll get your prime cost, which will become 3,20,000. Add factory overheads. All those lists we added, we'll add it one by one. One was depreciation on plant, we'll write it in the inner column, 15,000. Then lease rent for the production asset, 10,000 rupees. Then expenses paid for that pollution control and engineering, that was another 1,000 rupees. So total will come to 26,000. And you will get your factory cost, that will come to 3,46,000. Then you'll add all those things which we had, which was to be added with the factory cost, going in a sequence. So we'll first start with that is administration overheads was there, production related. So admin overheads, production related we had. So inner column 15,000. Then you can add the primary packing cost, that is 8,000. Then research and development cost for production related was 5,000. Then expense for quality control, so quality control expense was 4,000, right? So this will come to 13, then 28, 32,000. So you'll have your cost of production 3,78,000. You'll add opening stock of finished goods. Opening stock of finished goods, they had given us the amount 28,000 less closing stock of finished good. They are clearly given an indication they are going to follow the first in first out. So opening stock has been sold, whatever is closing stock we are having out of cost of production. So proportionate 3,78,000 produced was for 3,000 units. So we had 4,000 in the closing stock, so 378. That will come to 50,400. That is the valuation of closing stock. So you will have your cost of goods sold, which will come to 3,55,600. Then you will add your selling expenses, selling overheads. In that you had your advertisement expenses, which was 13,000. Yes, 13,000. Yeah, 1,300. Sorry, 1,300 is advertisement. So 1,300. Then we will write our secondary packing cost. That was secondary packing cost 1,500, 1,500, 1,500. Then you'll add your distribution overheads. Correct. Distribution, any overheads was pending? Yeah, nothing. No, only two things. Yes. So We'll add this. So distribution overheads is nothing. So add it up, you'll get the cost of sales 3,58,400. Add profit, which is 3,58,400 into 1 by 4. Correct? That will come to 89,600. So you'll have your sales, right? So this is how we do it. So that is your next question. That is question number 3B. Let's move on to the next one. Question number 4A. What is asked? STG is a manufacturer of chemical GK which is required for industrial use. Complete production operation requires two processes. The raw material passes through process 1 where chemical G is produced. Okay, process 1 raw material is put, we get the chemical G. Following data is furnished for the month of April 2022. That is 1 month data is given to us. What exactly are we supposed to do? Let's find out. Prepare a statement of equivalent production. So statement of equivalent units of production. Determine the cost per kg of chemical G in process 1 using weighted average method. So accordingly we'll do that. Prepare a statement of cost of chemical transferred to process 2. The total transfer to process 2, cost of abnormal loss, cost of closing WIP. Then STG is considering the option of selling 60,000 units of chemical G of process 1 without processing it further to process 2. Will it be beneficial for the company over the current pattern of processing 60,000 in process 2? You are not required to prepare process account. But we are supposed to make equivalent units of production, then also find out the cost per kg of chemical G, then how much is the cost of transfer, abnormal loss, WIP valuation, and process account is not to be done, right? So anyway, let's read it. What is the data given? Opening WIP, it is in kgs, that is units, 9,500, 100% material has been used, conversion is only 50%, so 50% pending. Input of raw material 1,05,000 units, completed is 83,000 units, closing WIP 16,500, 100% material has been put, 60% is conversion. And now in rupees, opening stock of WIP valuation, material and processing, input cost of raw material, processing cost 253,100. Normal loss is estimated as 10% of input. So whatever is your input of raw material, 10% is normal loss. So how much was our input? Our input was 1,05,000. So normal loss will be 10%, that will be 10,500 kgs. It has no realizable value, so scrap value is 0. Any loss over and above the normal loss is considered to be 100% complete in material and processing. But if they are talking of abnormal loss, so they are saying abnormal loss is to be considered to be fully processed and all material consumed. Okay. The company transfers 60,000 of output that is chemical G from 1 to 2 for producing GK. Further material added to process 2 which will yield 1.2 kg of GK for every 1 kg of G. Chemical transfer to process 2 for further processing are sold as GK for 10 rupees per kg. Any output completed in process 1 are sold as 9 rupees. Matlab this is at split of at end of process 1. At end of process 1 selling price. And 10 rupees is selling price after process 2. So 1 is 9 rupees you will get if you are selling after process 1. 10 rupees you will get if you are going to sell it after process 2. Monthly cost incurred in process 2 other than the material G is as so and so. Anyway, that we'll do later on. First of all, we'll do the equivalent units of production. So equivalent units of production, let's do it. How do we do it? Let's find out the abnormal loss. Okay, so we'll just do the rough work. How do you get the abnormal loss? If you see here, just rough working, if you do opening, you have 9,500 units, then 1,05,000 units is your input. 1,05,000 is your input, minus normal loss. Normal loss is 10,500. Then you have your closing stock 16,500. Correct. So your expected output should be, if you see here, 9,500 was opening, 1,05,000 we put in. Then there is normal loss which is gone, which we know. Then closing stock 16,500. So expected output is 87,500. But actual output, if you see, is 83,000. So obviously there is an abnormal loss of 4,500. Done. Okay. So this is your abnormal loss. So I hope you're clear with the abnormal loss calculations. Now we'll do the equivalent units of production. We'll do the equivalent units of production. Right? Fine. And that is where the weighted average cost, which we are interested in. Fine. So let's start. How do I do the calculation now? That is question number 4a, sub question 1, statement of equivalent units of production, weighted average method. Just doing it roughly. Particulars, the units, then materials, you have percentage, units, then you have conversion, the other part, percentage, units. Since it is weighted average, you can directly start units completed. Units completed was 83,000. So 100% material used, 100% means 83,000. Here also 100%, 83,000, right? Then normal loss. Normal loss was 10,500. So that will not be considered, as we all know. That is, that cost is to be absorbed by the good units. Then abnormal loss, yes, this will be performing a part, 4,500, 100%. This loss will be borne by the management, so we would like to value this. So it is included in the equivalent units of production. Closing stock, yes, it will be included, 16,500. 100% of material has gone in, 16,500. Here 60% has gone in. So that will be 9,900. So you'll get the equivalent units of production. Right. So equivalent units of production, 83,000. And this is 21. So 1,04,000. This is again 87,500, 97,500, another 100 gone, 97,400, right? So this is the equivalent units of production. Now what you're supposed to do is, we are supposed to find the cost per kg of the completed material for the valuation purpose. So statement of cost per kg. Statement of cost per kg. So we'll have to do for both. That is, we'll have to do for each category, material category and the conversion cost. So particulars, total cost for weighted average, equivalent units, cost per equivalent unit. So when we take materials, so what will come under material? You will have to cover the opening stock and whatever was the input. So opening stock and input. So let's see how much was our opening stock in our question. If you see the opening stock value, 29,500, and how much did we input? We put in 3,34,500. This was the total cost, right? These are the two material costs since we are doing weighted average. So that will be 29,500 plus 334,500, that is 30,000. So 3,64,000, and equivalent units is 1,04,000. So divide. So 364 divided by 1,04,000 is 3.5 rupees. Suppose we call it as A, B. This is A divided by B. Then comes the next is conversion cost that we have. So conversion cost or the processing cost, opening stock, it is 14,750 and here is 253,100. So we'll call it as a processing cost. Processing cost, that is 14,750 plus 253,100, that will come to 267,850, and equivalent units we have is 97,400. So if you divide, that will come to 2.75. So this, so total cost per kg of chemical G is rupees 6.25, right? Okay, so that finishes our sub question number 1. This is as per weighted average method. Next, then the next is statement showing the cost of material chemical G transfer to process 2, abnormal loss, and closing stock of WIP. So cost of chemical G which is transferred to process 2, sub question number 2. So cost of chemical G transfer to process 2. How many kilos have been transferred to process 2? 83,000 was completed and transferred. So it will be 83,000 kgs into rupees 6.25. But they are not going to transfer everything, I think, correct? They are going to transfer how much? Only 60,000. So remaining they are not going to transfer, they are going to sell it off, right? So we'll do only for 60,000. Entire output का करने की जरूरत नहीं है, तो 60,000. तो 60,000 into 6.25, that will come to rupees 3,75,000. Done. Then also the cost of abnormal loss. Cost of abnormal loss, that will be how much was the abnormal loss? 10, that is 4,500 units. That's 4,500 kgs into rupees 6.25. So that will be 4,500 into 6.25, 28,125. Then valuation of closing stock of WIP. So material to 100% has been put. How much is the closing stock material? That is 16,500 and this is conversion is 9,900. So 16,500 kgs into rupees 3.5 was the equivalent cost, and processing 9,900 into rupees 2.75 was the equivalent cost. That's valuation of closing stock of WIP. Then next, what you are supposed to do? They are saying if option of 60,000 instead of transferring to the next process, they apply. If they are saying if we sell it off, will it be beneficial, or if we want to process it further and sell it off, will it be beneficial? So let's read that. So what's going to happen if you're going to process? You'll have to add material further. Further material to be added in process 2 will yield a 1.2 kg of chemical GK for every 1 kg of chemical G introduced. And chemical transferred are then sold to at 10 rupees, right? Okay. And additional material cost is 85,000, processing is 50,000 for that 60,000 kgs. So what we do is, one of the easiest ways you find out the additional benefit or loss. So calculation of additional net benefit / loss on sale after process 2. So after process 2, if you are going to sell, how am I going to get? So additional inflow. So how much additional inflow I'll get? So if you're going to put 60,000, then for every 60,000, they are saying you will not get 60,000, but you'll get more, because what they are saying here, ki further materials are added in process 2 which will yield 1.2 kg of GK. Matlab, for every 1 kilo you will get 1.2 kilos of GK. Correct. So if I put 60,000, I'll not get 60,000, I'll get 1.2 times of 60,000, that is 72,000. But what will happen is, I can sell 60,000 into 1.2 times at rupees 10. Correct. Instead of me selling 60,000 at rupees 9. So this is additional net benefit. This is the value I get at the end of process 2. This is what I would have got at the end of process 1. But my quantity will go up by 1.2 times. But instead of 60,000, I will be able to sell 72,000 at 10 rupees instead of 60,000 and 9 rupees. So that will come to additional inflow is 1,80,000, right? Less additional outflow. What are the additional outflow? One is my material cost and my processing cost. Material cost was some 85,000, processing cost was 50,000. So 1,35,000 extra I would have to pay. Correct. So I would have to pay extra this amount, which would have gone out of my pocket for that additional revenue. So there is additional net benefit of 45,000. Therefore, chemical G should be processed further and sold as GK at the end of process 2. That's a conclusion you make, right? Good. Next, let's move on to the next question. That is your question number B part. So let's see B part, what's given in B part. UV Limited started manufacturing unit from October 1. It is producing designer lamp, selling at 450 per unit. This is selling price. What is supposed to do? Total fixed cost incurred by UV during the first quarter, BEP in rupees. Calculate the profit. Calculate the profit if the sales volume reaches 50,000 in the next quarter, that is quarter ending 30 June 2022. Anyway, first of all, you are supposed to calculate the fixed overheads, fixed cost. Selling price is 450. During the quarter ending 31st December, it produced and sold 12,000, suffered a loss of 35 rupees. So 12, in that October, November, December, 3 months, they sold 12,000 units, incurred a loss of 35. During the quarter ending 31st March, it produced and sold 30,000 units at a profit of 40 rupees per unit. Correct. Using these two data, you are supposed to find out the fixed cost. So we know the sales, we know the profit of quarter from October to December, then the quarter from Jan to March. So you know well, the difference in profit upon difference in sales will give you the PV ratio, because difference in profit upon difference in sale is the PV ratio, because the difference in profit is same as difference in contribution, assuming the fixed cost is same, because they are just saying fixed cost. So we will assume it to be the same, right? So that's a technique. So what we do is 4B, we'll write units, sales in rupees, then profit slash loss. So quarter from October to December, October to December, 12,000 units. So 12,000 into rupees 450. Here 12,000 into rupees 35 loss. Then Jan to March, they could sell 30,000 units. So 30,000 units into rupees 450 and 30,000 into, we got a profit of 40 rupees, right? So this will be 6 and 48, so the 54 lakhs. This is 36 and 6, so 4,20,000, but this is a loss. And here 13, 14, so 1 crore 35 lakhs, and here 12 lakhs. Assuming fixed cost is same in both quarters. The PV ratio will be difference in profit upon difference in sales. That will be 12 lakhs minus 4,20,000 loss upon difference in sales 1,35 lakhs minus 54 lakhs. Right? So that will give you the PV ratio. If you calculate, that will come to 0.2 or 20%. Fine. Now we know the PV ratio. So what you do is, like sales, 20% is contribution. You know the profit. The difference is nothing but your fixed cost. So we'll take the quarter from Jan to March. The sales was 1,35 lakhs. So your contribution will be sales into 20%, that is 27 lakhs. Then you know the profit for the quarter was 12 lakhs. So your fixed cost will be 15 lakhs. Right? So 15 lakhs is your fixed cost. Now what are you supposed to do? You'll find out the BEP in sales, in rupees. So how do you get the BEP? Fixed cost upon the PV ratio. That is an easy one. So fixed cost upon PV ratio. So BEP rupees. The fixed cost is 15 lakhs and PV ratio is 0.2. So 75 lakhs is the BEP rupees. Third sub question. What are we supposed to do in the third part? Third part, calculate the profit if you reach 50,000 volume in the next quarter. So 50,000. Now you're going to sell 50,000. They are saying what is the profit? So that is a quarter from April to June 2022. So your sales will be 50,000 into rupees 450 was the selling price per unit. That is 2,25 lakhs. So you'll have your contribution, which is sales into 20%. That will be 45 lakhs. Less the fixed cost. The fixed cost is 15 lakhs. So profit will be 30 lakhs. That finishes your sub question number B. Next, generalize the following transaction assuming cost and financial accounts are integrated. So integrated financial statement, integrated you are supposed to assume, then write the journal entries. Okay, anything else? Nothing. So we can discuss it orally. Direct materials issued to production. So direct material issued to production. So obviously it will be WIP control account debit to store ledger control account. Allocation of wages, that is indirect wages you are allocating. That is indirect wages, so it will go to factory overheads. So you can say factory overhead control account debit to direct wages account. That you can say wages control account. Factory overheads absorbed 2,25,000 absorbed, so it will be absorbed by the WIP control account debit to factory overheads. Admin is this is only the over absorbed part they are talking about, not the allocation. So instead of writing WIP to factory overhead, that's for the allocation part of it. They are talking of the over absorbed part of it. So whatever is the over absorbed part, you can transfer it to the costing P&L account. So over absorbed, obviously the costing P&L will be credited. So factory overhead control account debit to costing P&L. Under absorbed is a loss. So costing P&L account debit to admin overheads account. Deficiency found in raw material, which is considered to be normal. So normal, so you transfer it to the factory overheads account. So factory overhead control account debit to store ledger control account. I hope you are clear. So here it is not allocation, it is only the over absorbed. So that's a profit to the organization. So costing P&L will be credited, factory overheads will be debited. Okay, done. Next question number 5A. Now what exactly are we supposed to do in question number 5A? So Stars Limited manufactures 3 products using the same production methods. Conventional product cost is being used. Details of 3 products, typical period, AX, BX, CX, labor hours per unit, machine hours per unit, material per unit, volume in units are given. Okay, what are we supposed to do? Let us check. Calculate the cost per unit for each product using conventional method, traditional method. Conventional is traditional. Calculate the cost per unit using ABC. So you are supposed to do as per conventional as well as ABC. So first we will talk of the conventional one, which should be simple. Then we'll move on to the ABC part. So here the labor hours per unit, machine hours per unit, material per unit, and volume is given to us. What exactly is given other than that? Labor cost is 20 rupees per hour. Production overheads are absorbed on the basis of machine hours. Overhead absorption rate is rupees 30 per unit. So this is for conventional. Management is using ABC system to ascertain the cost. Further analysis shows the total production overheads can be divided as follows. Production overheads ka breakup: 40% is setup, 10% is machinery, 30% is material handling, 20% is inspection, total is 100%. Okay. The following activity volumes are observed: number of setup, number of product material movement, number of inspection. Anyway, first we'll do the conventional part, right? So let's do the conventional one. That should be easy. Yeah. So what are the products we are having? We are having the product AX, BX and CX, right? So let me check if we can manage it here. So easy. Okay, so let's do it here itself. So we'll take it up here, A, B, C. We'll take it here. Okay. Then how do we do it? It starts with material. So material per unit. Now this is, they have played a trick here. Material per unit. This is in rupees, huh? Yeah, because it's per unit, and here nothing is mentioned in rupees. So obviously it's not kilogram. It's in rupees only. So direct material 35, 25, 45. Then direct wages 1 hour, 0.9 hours, 1.5 hours. What is the rate? 20 rupees per hour. Multiply. 20 into 1 is 20, 20 into 0.9 is 18, 20 into 1.5 is 30. You will get the prime cost. So prime cost will be 55, 43 and 75. Then you add your production overheads. You add your production overheads. What is the rate? The rate is 30 rupees per machine hour. So machine hour 30 rupees per machine hour. So 2 rupees, 2 hours into 30. So 2 into 30 is 60. 30 into 1.5 is 45. 30 into 2.5 is 75. So you will get the total cost. So total cost per unit you will get. So that will be 115. This is 88. This is 150. 115, 88 and 150, right? So that finishes your sub question number 1, which is conventional method. Next is we are supposed to do for the ABC. So activity based costing. So activity based costing, they are not given as a total production overheads. So we have to calculate the total production overhead using the conventional method. And out of that 40% will be setup, 10% is machine based and blah blah blah. So how do I get it? Very simple here. So we know the volume. So we know the volume, we know the production overheads per unit. So into 60 rupees is the production overheads per unit, 45 here, 75 here. So into 60 into 45 into 75. So this will come to 4,50,000 and this will come to 5,62,500 and this will come to 18,75,000. So total production overheads will come to 28,87,500. Right? This is the total production overheads which we have got. And that will break it up as 40% will go to setup, machinery 10% and so on. So 40% of 28,87,500. 40% of 28,87,500. So let's check. How much does it come to? So 28 lakh 87,500 into 40% will give you 11 lakh 55,000. 10% is 288,750. 30% will be 8 lakh 66,250. 20% will be 5 lakh 77,500. Right? Now, this is your overheads. Right? And we have the cost driver volumes. We have the cost driver volumes. So what we do, 1540 is the cost driver volume for setup. So cost driver volume 1540. So divide 11,55,000 divided by 1540, you will get the cost driver rate. You will get the cost driver rate 11,55,000 divided by 1540, rupees 750 per setup. 750 per setup will be the value. Next, machine related is 2,88,750. Here nothing is related to machine related, nothing is given here in specific. So we'll use the machine hours. We'll use the machine hours. So how much is the machine hour? 2 hours, 1.5 hours, 2.5 hours. These are all per unit. So multiply by the volume. Right? So 2 into 7,500, 15,000. 1.5 into 12,500, that will be 18,750. Then 2.5 into 25,000, that will come to 62,500. So add that totals up to 96,250. Right? Total machine hours. So the rate will come to rupees 3 per machine hour. Done. Material handling, I think material data is given. Number of material movement 11155. So 866,250 divided by 1155, that is 750 per material movement. Then inspection, I think they are given as a total inspection 1500. So 1500, 577,500 divided by 1500, that comes to 385 rupees per inspection. Done. So this is how you will get the cost driver rate. Okay. Now can we do the total cost as per activity based costing? Of course we can do that. It becomes easy and simple. So like product A, product B, product C, we know up to the prime cost per unit. How much was our prime cost per unit? Here we have done it. 55, 43, 75. 55, 43, 75. 55, 43, 75. Done. Now we'll add the production overheads. So in production overheads, सबसे पहला is setup cost. So what do you do for the setup cost? How many setups? 350 setups. What was the rate per setup? 750. So 350 into 750 divided by how many? What was the volume here? The volume was 7,500. So per unit will come to 35 rupees. Next we'll do for machines. What is the rate? The rate is 3 rupees per machine hour. 3 rupees per machine hour. How much machine hours you require? 2 you require. So 3 into 2. 6 rupees. Then material movement, 200 material movements, and what is the rate? 750. So 200 is a total material movement. So 200 into 750 divided by 7,500. That will come to 15,000 and divide, that is 20 rupees. Then inspection cost. What is the inspection cost? The inspection cost is 385 rupees per inspection. How many inspection? 200 inspections. So it will be 385 into 200 inspection and 7,500 units you are producing in all. So if you do that, that will come to 385 into 200 divided by 7,500. That comes to 10.267. Add that will give you the total cost per unit. Same way you do for B, same way you do for C. I hope it's clear. Yes, fantastic. Next one, that is your question number B part. So let's see B part. What is given here? Let's see B part. Manufacturing department of company has employed 120 workers. Okay. Standard output of NPX is 20 units per hour. So 20 units per hour. 1 hour they are producing 20 units. And the standard wage rate is rupees 25 per labor hour. What exactly are we supposed to do here? Okay. Calculate the labor cost variance, labor rate variance, efficiency variance, idle time variance. Okay, matlab it's standard costing and labor part. What are you supposed to do here? 48 hours week. Okay, department X produced 1000 units of NPX despite 5% of time being paid being lost due to abnormal reason. The hourly wage rate is 25.7. So this is your actual rate. This is your standard rate. That much we are very clear. And this is your actual output, 1000 units. And this is the data, that is they produce 20 units in 1 hour. So 20 units in 1 hour they are done. So this is, you can say, the standard output. We'll revise and get it to the actual output. Correct? So given standard is for 20 units. Done. So for given standard of 20 units, what is the standard hour, what is the standard rate? Then we'll revise that standard output to actual output of 1000 units. So we'll say standard, revised standard for 1000 units, then actuals for 1000 units. Once the table is done, you can do the calculations further, right? Okay. So let's collect the data. Let's go on to our worksheet. That is question number 5B. Done. So we'll say given standard for 20 units, then revised standard for 1000, actuals for 1000. So we'll get the standard hours, standard rate, standard cost. Standard hours, standard rate, standard cost, actual hours, actual rate, actual cost. I think the actual hours are given to us. We can fill that, easy one. They are saying 1000 units, 48 hours a week, 5% lost, 25.7. So 48 hours a week, if you see here, 48 hours a week is the performance time of one worker and there are 120 workers. So our value will become 48 hours into 120 workers. That will come to 5760 less your idle time. Abnormal idle time is 5%, which will come to 288. 5760, 10% is 576. So the labor hours net labor hours will be 4572. The rate is 25.7. So 5760 into 25.7, that will come to 14,80,320. Done. Okay, now let's come down to the standard hours. 20 units was produced in 1 hour. And how many people are working in that 1 hour? 120 workers. So it will be 120 hours. And what was the rate? 25 rupees was the rate. Now this has to be revised from 20 to 1000. So for getting from 20 to 1000, you multiply by 50. So this will come to 6000. And this is 25 rupees. So 1,50,000, right? Done. Yeah, now we'll do the calculation. Simple one, labor cost variance. You're supposed to spend 1,50,000. 15 lakhs, no? Yeah. Sorry, this is 151832. Yeah, sorry. Okay, so 148032. Fine. So 1,50,000 minus 148032. So favorable variance of 1968 favorable. Then next one, we are supposed to calculate rate, efficiency and idle time. So rate, so easy one. The rate variance will be the difference in rate, that is 25 rupees we are supposed to pay, we pay 25.7, and for the actual 5760 hours. So multiply, you'll get the adverse variance. Third is the labor efficiency variance. You have to be careful here. You're supposed to work for 6000 hours, but you'll compare with the net hours. Net hours is 5472 into the standard rate. Done. Then final is idle time. Idle time variance. Idle time was 288 into rupees 25. So that is how you do it. This will be adverse, you paid higher rate. This will be favorable because you have taken less time. This will be adverse since you have it's an idle time. Done. Chalo, next let's move on to the sub question number C part. What exactly is asked here? RST produces 3 joint products X, Y, Z. The products are processed further. Okay, pre-separation cost apportioned on the basis of weight of output of each joint product. Pre-separation cost is also called as a joint cost. On what basis they are doing? On the basis of the weights. The following data provided for the month of April 2022. The cost up to the separation point, that's why it's the joint cost. The joint cost is 10,000 rupees, which will be apportioned on what basis? The weights. Very clearly given. Output is 100, 70, 50. After separation, after the separation is done, extra cost. Selling price after processing at the point of pre-separation. Split off point, this is a selling price, but you process further and sell, you are able to sell at a higher price. Prepare a statement showing the profit or loss made by each product after further processing using presently adopted method of apportionment of pre-separation cost. If they are going to sell it after processing, what is the profit or loss? Advise the management purely on whether these 3 products should be processed further or not. So after processing, after further processing, what is the profit or loss to be earned? That we are anyway going to do it as sub question 1. So sub question 2, in that we'll add on, if I sell it at the separation point, what is the profit or loss? Then I'll compare. After separation, what is the profit? If I sell it at before separation, at the point of separation, what is the profit? So wherever it is more, we'll pick that choice. Right? So let's first do it after separation. If we are going to sell it, what is the profit or loss to be done? That is sub question number 1. So what you'll have? We'll have the sales minus the joint processing cost minus the additional cost which we are going to incur. You'll get the net profit or loss. Okay, let's do that. Question number 5C, sub question 1, statement of profit or loss when products are sold after further processing. So we'll write particulars X, Y, Z and total. So sales, we'll get the sale value. So how much units they're going to sell? 100 liters, and after separation, so 50 rupees, 70 liters, 80 rupees, and 80 liters, 60 rupees. Fine. So this will be 100 into 50, 70 into 80, and 80 into 60. So this is 5,000, 5,600, 4,800. This will come to 15,400, right? Less the joint processing cost was 10,000 rupees. So 10,000, how are we going to break it? On the basis of weight. The weight was 100, total is 250. 10,000 into 70 upon 250, these are the weights. So 10,000 into 80 upon 250, total is 10,000. So you'll have 4,000, that is 40%. This will be 2,800, 3,200. Further what? Less further processing cost. How much was the further processing cost? Further processing cost is 2,000, 1,200, 800. 2000, 1200, 800. So we'll write here 2000, 1200, 800, total will be 4000. So you do the subtraction, you will get profit or loss. Profit slash loss. So 5000 minus this is 1000 rupees loss. 5600 minus 4000, 1600 profit. 4800 minus this, 800 profit. So we'll have 1400 profit. Correct. So this is if I'm going to sell it after process, after further processing. This is sub question 1. Sub question 2, what do? Statement of profit loss when sold at point of separation. If I'm going to sell it at the point of separation, what is my profit or loss? I'll find out. Easy one. So sales. Now the selling prices will be lower. What price are we going to sell? 25, 70, 45. Same quantities, but 25, 70, 45. So here I'll sell that. So 100 into rupees 25, 70 into rupees 30, sorry 70, and this will be 80 into 45. Okay, yeah, 1 minute, we'll just change it. Yeah, so let's come back to that. So how much does it come to? This will come to 2500, 4900, and this will come to 3600. Total mila ke 11,000 less the joint processing cost. This we already got, we pick it from here directly. 4,000, 2,800, 3,200, and 10,000 total. So 4,000, 2,800, 3,200, 10,000 total. So we'll find out the profit or loss. So here is a loss of 1,500. Here is a loss of profit of 2,100, 400 profit. Correct. So 400 rupees profit. So total will come to 2,500. So 1,000 rupees is your profit, right? So now if you compare, so we'll take the decision. Process further. Don't process further. Correct. Let's compare. If I process further, what's happening? 1,000 rupees loss. If I don't process further, 1,500 loss. So what should I do? Process further. Correct. Sensible. Loss will be less. If I move further, 1,600 profit. Don't move further, 2,100 profit. So don't process further. You learn more. Further, if I process 800 profit, don't process 400 profit. So what do? Process further. So what will happen? Here my loss will reduce to 1,000. Here I'll earn 2,100. Here I'll earn 1,800. So overall it will jump to 1,900. So this is much better than 1,400 rupees and also better than 1,000 rupees. Done. That's how you present the decision. Fine. Good. Let's move on to the next one. This is question number 6A. Explain essential features of good cost accounting system. This from your chapter number 1, which you can directly write. Now they are saying write down the treatment of following items associated with purchase of raw materials. So purchase of material, how is the treatment to be done, right? So सबसे पहला है cash discount. So what we'll say about cash discount? Now cash discount is the discount or benefit which you get out of making the payments early. So you have funds, you're making the payment early. So that is because of your financial management. Correct. So it's more of a financial item. It's of a financial nature. So this will not be deducted from the purchase cost. Done. So ignore. IGST, that is your GST part of it. So what do? So of course, as far as GST is concerned, you will have to check Are you going to get the benefit of this further? If you're going to get the benefit of this further, so obviously this is not a cost. Means when I'm purchasing, I'm going to pay GST, and when I'm going to sell it to my customer, I'm going to charge GST. So obviously I'm going to get a benefit of that. If I'm going to get benefit, so there is no impact on my pocket, so ignore. But if I'm not going to get a benefit of this further, correct? So if I'm not get a benefit of this further, so it becomes my cost. So we'll write like that. If you are going to get benefit further, then this will not form a part of purchase cost. But if there is no benefit further, so it will be chargeable here. That is your ITC जो हम बोलते हैं, correct, claim. Then demurrage is a penalty. It is a penalty which is imposed by the transporter for delay in the uploading of material, downloading of material. मतलब material आ गया है, uploading में we are taking time, downloading में we are taking time, that's unloading में we are taking time. So obviously the transporter charges penalty. He is saying my vehicle is stationed here because of your uploading and downloading, that is unloading, my time is wasted. So obviously you have to pay penalty, and this is nothing but an abnormal loss, abnormal cost. So this will not form a part of purchase cost. Shortage, that is a shortage of materials. Now shortage of material, you have to be careful ki what exactly is the reason. You have to probe in. If it is due to normal reasons, that's unavoidable reasons, normal reasons, then like evaporation is there, which is the best example, or you can say some unavoidable conditions which has led to that, and that is commonly prevalent across the industry. So it is a normal loss. So if it is a normal loss, then it has to be absorbed by the good units. But if it is due to the abnormal reasons, whatever may be the abnormal reason, like shortage due to theft, shortage due to misplacement, shortage due to pilferage, mishandling, then this will not form a part of material cost. So there is a classification. Then the next one is basic custom duty. This is paid for import of raw material. So when you're importing raw material, you have to pay the custom duty. So obviously it will form a part of the purchase cost. Done? Okay. Then I think move on to the next one, that is treatment of overtime in the following situations. So now we are going to discuss the overtime premium. Ki when there is overtime, how we are going to charge the overtime. We all know there are various cases which is very clearly stated in the module. So same reasons will pick up. Of course, it will differ from circumstance to circumstance. Number one, SV Limited wants to grab some special orders and overtime is required to meet the same. Now, SV Limited company is going to grab some special orders. They want to get some special orders for which they are going to incur overtime. Special order, no, it's not part of your normal course. So if this overtime is for the special order, then it should be treated as it is treated as overhead and will form a part of your cost of production. Fine. It will form treated as overhead and charged to that particular department or to that particular order to find out what is the true profit or loss which you have earned. Department has work overtime to make up for some shortfall in production due to fault of management. Now this is fault of management. This is abnormal reason. So obviously this will be charged to that particular department, or that is it will go to your it is a mistake of the management. It is due to the fault of management in department Y. So obviously department Y has to bear that particular cost, not department X. It's a mistake of department Y. S Limited has work overtime regularly throughout the year due to as a policy due to workers shortage. Now if it is regular feature and due to shortage of workers, and we know it is going to happen throughout the year, so better to form a part of your you can say this is better to form a part of your direct wages, because it's very predictable, no, that ye overtime hone wala hi hai and we're going to pay this extra cost. It's better to form part of direct labor cost. Due to flood in Odisha, RS had to work overtime to complete a job. Now this is an abnormal reason. So obviously this should be forming a part of your costing P&L. Abnormal circumstance, so costing P&L will be charged. Customer has requested MN to expedite the job due to urgency of the due to his urgency. They are pressurizing us. Please do our work fast. So we will say we are going to pay premium for that. So he'll say, oh, no problem. So charge that to him. Simple. Discuss briefly some like criticism which may be leveled against standard costing system. So this is again part of our theoretical area. Standard costing, what are the criticism, that is what are the lacunas, what are the shortfalls, that has to be discussed here, that you can pick from the module directly. Identify the method of costing from the following statements. Costs are directly charged to a group of products. That is cost which is directly charged to a group of product, that is your something like your join cost, or it is your batch cost. So that is what we will understand from here. Nature of product is complex, and method cannot be ascertained. Now this is nothing but it will be a job costing system because it's a complex product. So job costing system will follow here. Cost is ascertained for a single product. So it is single output. All costs are charged directly to a specific job. All costs are directly charged to a specific job. So this is again job costing method. Costs are charged to operations and averaged over units produced. So costs are charged to operations and averaged over the units produced. So this is nothing but you can say single output, that is you can also call it as single output, or you can call it as a particular batch, because you will produce in lot, and whatever cost is incurred is charged to that particular part and averaged out. So total cost divided by the number of units. Fine. So this is how you will do this particular system. Fine. Okay, I hope it's useful to you. Thank you very much.